The last few weeks have been wild. We've had B-2 stealth bombers take off in the middle of the night, missiles launching across the Middle East, and now a ceasefire. You've probably heard it 100 times. Gold goes up in times of war. But here's the reality. Even with all that going on, gold did not surge. In fact, while Israel and Iran were trading missiles, gold dipped about 2%. So what's driving the price of gold? Well, it's something far more dangerous than war and something more permanent: debt. Before we begin, remember to like this video and subscribe for more economic updates. Here's the truth. The U.S. national debt is now over $36 trillion, and by 2034 is projected to hit $56 trillion. And even now, we're already spending over $1 trillion a year just on interest. Let me say it again. Just the interest is over $1 trillion, and it's getting worse. The Congressional Budget Office says that by 2034, we'll be paying $1.7 trillion annually in interest. That's almost the size of the entire projected Medicare budget. It's pretty obvious that these ridiculously high debt numbers are a big problem. But what kind of real damage can this debt actually cause? To answer that question, all we have to do is take a hard look at the almighty dollar. While the dollar is still technically dominant, it has been slipping. Its share of total global reserves, including gold and SDRs, has dropped to 46%. While gold just passed the euro as the number 2 global reserve asset. That's not just a trend, that's a global indicator. Unfortunately, there are many Americans who are unaware of what's going on and being left in the crosshairs. But I'll tell you who was aware of what's going on: the central banks. They've been not so silently preparing for a U.S. economic crisis for years. In fact, central banks have been buying over 1,000 tons of gold every year for the past 3 years. And in the first quarter of this year, they've already bought nearly 250 tons of gold. Gold now makes up nearly 20% of total central bank reserves, and that percentage is steadily moving up. As central banks and investors flock to gold, it keeps breaking price records, with Bank of America saying gold price could hit $4,000 an ounce in the next 6 to 9 months. You don't need a full-blown war for gold to rise. Debt, dysfunction, interest payments, and global monetary shifts are doing the job. And if you think the system is about to reverse itself, consider this. Congress just passed a bill that would increase the debt ceiling by $4 trillion. And the Senate is working on a version that would increase the debt ceiling by $5 trillion. This isn't about fear. This is about seeing the fiscal picture clearly, because Washington isn't fixing the problem. They're making it worse. The question is, are you ready?
At Augusta Precious Metals, we don't sell fear, we teach strategy. Sign up for a one-on-one web conference today. No commissions, no pressure, just education. Click the link in the description to learn more.